Looking to boost your passive income with covered call ETFs with yields north of 10%? If so, we have 7 of the biggest yields out there that almost assure a helping heaping of dividend goodness. Holy banana bread, let's do this! Covered call ETFs are like the overachievers of the investment world. They don't just rely on dividends to make you money, they also pump it up by selling call options to bring in that extra cash. The premiums as well as the money made on those options goes a long way to make those dividends much bigger. This of course benefits us as investors as we look to increase our passive income. That's not entirely a bad thing. Before we jump under the covers, let me know in the comments your favorite covered call ETF. Thank you for dropping in on the home of free financial content on YouTube. While you are here, please like and subscribe as you don't want to miss a single moment, and a huge thank you for that click. This is going to be exciting as we have some of our old friends back for this video as well as a few new ones. Some of these ETFs are absolutely very new, and as a result, you may have trouble adding them to your watch list. Anyway, without any further ado, let's get this going. Kicking off the list, we have Horizon's Enhanced Income US Equity ETF, which has a ticker of USCC.U. This ETF uses covered calls to enhance the return on their portfolio of some of the largest US-listed equity market stocks. This ETF has net assets of $29.66 million, and they have an NAV of $12.63. The inception date for this ETF is September 13th, 2011. They have a management fee of 0.85%. The dividend yield of this fund is 10.69%, which is paid out monthly in the amount of 12 cents per share. This dividend has changed quite a bit, as it was 13.7 cents in November. It's one of those dividends that I like to refer to as a floater, so that's something to always keep in mind if you're considering investing in this one. So let's talk a little bit about their growth. We will begin with the 3-year growth, which saw their share grow from $12.06 to $12.80 for a return on investment of 6.14%. You also have dividends that would push up that total return closer to 13.81%. If you look at 2022, they started at $16.01 and fell to $11.97 for an ROI of negative 25.23%. And with those dividends, of course, factored in, we have a total return of negative 15.43%. That total return, of course, is still doing better than the overall market. As the S&P 500, it was down 19.44%. So far in 2023, like a lot of stocks, they are up, and this time it's 6.93%. This is one that will definitely see better days once we get a recovery in the financial sector. Nonetheless, with good management, they should be able to keep the dividends coming, though with any of these high-yield ETFs, it's always possible to see the dividends move around a wee bit. In at number 6, we have Harvest Tech Achievers Enhanced Income ETF, which has a ticker of HTAE. This ETF uses covered calls and modest leverage to enhance the return on the Harvest Tech Achievers Growth and Income ETF, which has its own ticker of HTAE. And of course, if you look at this one, HTA and then the E for enhanced. This ETF has net assets of $12.93 million, and they have an NAV of $11. The inception date for this ETF is October 25th, 2022, so it is relatively new. The ETF does not have a management fee of its own, but they will pass on the management fee of HTA, which is 0.85%. The dividend yield of this fund is 11.54%, which is paid out monthly in the amount of 10 cents per share. So let's talk a little bit about their growth. They began with a share price of $10.23 back in October, and they are listed at the time of recording at $11.05. This is a return of investment of 8.02%. If we factor in those 2 dividend payments they've received so far, we get a total return of 9.97%. That's not actually too bad. I am really liking the long-term outlook for tech. This is an ETF that should see some impressive growth when the recovery arrives. In at number 5, we have the Hamilton Canadian Financials Yield Maximizer ETF, which has a ticker of HMAX. This ETF uses covered calls on 50% of their holdings in blue-chip Canadian financial institutions. In fact, 75% of their holdings are in the top 6 big banks. This ETF has net assets of $28.22 million, and they have an NAV of $16.22. The inception date for this ETF is January 20th, 2023. So it is brand spanking new. This ETF does have a management fee, and it's pretty low. It's at 0.65%. The dividend yield of this fund is 13%, which is paid out monthly in the amount of 18.5 cents per share. Normally we would talk about growth, but with this ETF being around for, well, just days, it's kind of more of a moot point than anything else. This seems to be another good fit in the Hamilton family of high yield ETFs. I will probably add some to my portfolio, but because it's so brand new, I'm still going to watch them pretty darn close. Moving on to number 4, we have the Horizons Canadian Oil and Gas Equity Covered Call ETF, which has a ticker of ENCC. This ETF uses covered calls on some of Canada's largest oil and gas stocks. They have net assets of $70.28 million, and they have an NAV of $11.77. The inception date for this ETF is April 11th, 2021, and their management fee comes in at 0.65%. The dividend yield of this fund is 13.66%, which is paid out monthly in the amount of 10 cents per share. Now let's talk a little bit about the growth. We will begin with the 3-year growth, which saw their share grow from $6.77 to $11.78 for a return of investment of 74%. You also have dividends that would push that total return closer to 105.02%. This one does need to come with an exclaimer, as 3 years ago, they had a really big price drop that just so happened to, well, coincide with 3 years ago, and that is causing this number to be inflated much more than it should be, so it's really probably not as impressive as it seems. If you look at 2022, they started at $9.82 and rose to $11.17 for an ROI of 13.75%. And once we factor in the dividends, we have a total return of 27.39%. So far in 2023, they are up 5.46%. Oil and gas has a good amount of volatility, and that can be played well with covered calls. So I do think this is one that will do well with the dividend, though the ETF price will be up and down probably quite a bit. Coming in at number 3, we have the Horizons Enhanced Income International Equity ETF, which has a ticker of QQCC. This ETF is a covered call ETF that gives investors exposure to the largest domestic and international non-financial companies listed on the NASDAQ via their HXQ ETF. They have net assets of $14.47 million, and they have an NAV of 9.78. The inception date on this ETF is September 13th, 2011, and their management fee, well, that comes in at 0.85%. The dividend yield on this fund is 14.23%, which is paid out monthly in the amount of 10.75 cents per share. They did slightly reduce the dividend this month, but this fund does have a history of moving their dividend around a wee bit. Once again, we've got another floating dividend. So let's talk a little bit about their growth. We will begin with the 3-year growth, which saw their share drop from $11.34 to $9.10 for a return of investment of negative 19.75%. You also have dividends that would push that total return closer to negative 6%. In 2022, they began the year at $11.04 and they finished it at $9.10, and that is a return of investment of negative 17.57%. Adding in their dividends, we get a total return of negative 8.51%, which is still much better than the market average. So far in 2023, they are up 8.79%. Tech is a sector that will rebound, and when it does, there will be some very nice growth to add into the already good dividends with this one. In our almost top spot, we have the Hamilton Enhanced US Covered Call ETF with a ticker of HYLD. They, of course, hold ETFs within this ETF. That includes QYLD, RYLD, XYLD, JEPI, JEPQ, GLCC, HHL, and NXF. They, of course, use covered calls to further enhance their yield, and they do change some of these holdings from time to time. This ETF has net assets of $370.3 million, and they have an NAV of 12.37. The inception date for this ETF is February 4th, 2022. Their management fee, that comes in at 0.65%. The dividend yield of this fund is 14.25%, which is paid out monthly in the amount of 14 cents per share. That's not too shabby. So let's talk a tiny bit about about their growth. In 2022, they began the year in February at $16.08 and finished it at $11.79. That is a return of investment of negative 26.67%. Adding in their dividends, we get a total return of negative 17.97%, which is very much close to the market average. So far in 2023, they are up 4.92%. This is a great little dividend stock that should be fine as it is moving well with the market. And if you are down on capital with this one, just wait for the market recovery and you should be okay. In our top spot, we have the Tesla Yield Shares Purpose ETF with a ticker of YTSL. This is a fund invested solely in Tesla, and they are using covered calls to really enhance that yield, and thus they're in our top spot. This ETF has net assets of $5.3 million, and they have an NAV of 21.32. The inception date for this ETF is December 14th, 2022. Their management fee is one of the lower ones, coming in at 0.40%. The dividend yield of this fund is 17.27%, which is paid out monthly in the amount of 30.67 cents per share. That is absolutely not too shabby. So let's talk about growth. They began with a share price of $14.85 on January 12th, and at the time of recording, they have a share price of $19.30. That is an ROI of 29.97% in less than 2 weeks. Holy friggin' banana bread. This stock is absolutely tied to Tesla, and as Tesla does great, so will the share price of this stock. This is a wild card stock that has won every hand so far. I have made some great profits already on this one, and for now, it is totally worthy of that top spot. With these ETFs we have looked at today, many are new, and you always have to carry a little bit of caution with these stocks. Be sure, as usual, to do your due diligence first. Then, afterwards, perhaps you can find some success with a few of these passive income megastars. It does not have to end here. Check out my video on the Canadian pension plan that I will link on the left. Otherwise, check out the video on the right that YouTube thinks you will like. Your click will decide who is right, and I will see you in the next video.